Regulus Quarterly Financial Astrology Forecast by William Stickevers.
So the way Jupiter-Saturn impacts the markets and the economy is in several ways. So the potential impacts, we often see market volatility, we see corrections, not necessarily crashes, but we often do see corrections. We see shifts in market sentiment, shifts in risk appetite by investors, government intervention, where government or central banks will shift and pivot in their policy. We just recently saw that with the Fed lowering the interest rates. We're seeing a focused shift to value and wealth preservation, where people want to lower their risk exposure. Investors focus on reducing risk exposure, and speculators focus on contrarian opportunities. Where is the smart money moving? All right, what assets are they moving it towards? Stocks, bonds, gold? Are they moving it towards Bitcoin, etc.? So we see speculators seeing an opportunity where if they believe the stock market is overpriced, overvalued, I should say, and they see a correction coming, they will move their money beforehand, proactively, before the rest of the herd mentality figures it out, into another asset class. So historical correlations, we've seen Jupiter-Saturn alignments correlate with the pre-Gulf War recession of 1990. George Bush Sr. was expected to win the election against Clinton. Then we had the pre-Gulf War recession, where we saw the 10-year and 3-month yield curve resetting to zero earlier in the year, leading to Clinton's victory. We see the pre-dot-com recession. The conjunction followed the recession start, again preceded by the yield curve resetting to zero. The pre-Great Recession, where the square aspect of the Jupiter-Saturn alignment happened before the recession, with the yield curve reaching zero later on. And then the COVID crisis, of course, in 2020, where the conjunction happened after the recession began, with the yield curve hitting zero the previous year. So there's a lot of correlation between economic downturns and the Jupiter-Saturn alignments, particularly the conjunctions and squares historically coincide with periods of economic contraction and market volatility. And we often see the heralding of it, or the correlation of a recession or a contraction, has to do with the yield curve resetting back to zero. That correlates shortly before or after a Jupiter-Saturn alignment. Now, capitalism must be well engineered. So when you see Jupiter-Saturn alignments come into formation, basically the archetypal resonance has to do with the fact that capitalism is a well-tempered instrument, and it must be well-engineered, and it needs to be fine-tuned and oiled and tweaked. It's a very high-maintenance type of system, and these type of periodic engineering events, right, which we call corrections, often happen during Jupiter-Saturn alignments. So the ability to make money, save it, and put it into capital, which is effectively capitalism, is an effective motivator of people and allocator of resources that raises people's living standards. So that's essentially what the Jupiter-Saturn function serves, is that it will correct or re-engineer or engineer a new asset class or a new way. The economy and the markets will be engineered or re-engineered when these alignments come into formation. So when Jupiter-Saturn alignments are coming into formation and everything is out of whack, we often see a disconnect between Main Street and Wall Street. And we're seeing that happen right now. So the K-shaped recovery, this is the Bidenomic K-shaped recovery. There's a disconnect between Wall Street and Main Street. There's polarization between wealth classes. There's wealth concentration happening with the privileged class. The Wall Street people are driving the Ferraris, right? And the Main Street people are shopping at the Dollar General stores. By the way, the Dollar General stores are what? They're closing down throughout the country because the recession is so good, they're going out of business. So wealth concentration, the wealth is concentrating with the elite, and there's struggles for the working class. We could see that here. Economic volatility, civil strife, this all correlates perfectly well with what the Jupiter-Saturn square alignment attempts to correct. So capitalism must be well engineered. This is an example of crony capitalism, where that engineering, right, stopped sometime around 2021, 2022. So certainly by 2021, we saw the beginning of the disconnect if we take this point here. Now, what's interesting is this Jupiter-Saturn square signaling an economic shift, where we see this chart depicts a very stark contrast in financial performance, suggesting that the wealthy continue to thrive while challenges deepen for lower income sectors. So when we're talking about lower income, I'm not talking about, people that just shop at the Dollar General store or Walmart. We're talking about people who we would term as solidly middle class, college educated professionals, right? Who make a salary somewhere between $50,000 and $150,000 a year. So they are being deleveraged, and the privileged class and the elite political class, the people that watch CNBC, MSNBC, right, listen to NPR and don't question it, these are the people that are gaining. Okay, so I think you get it. Now, here's the interesting thing. The poly markets, prediction markets predict a soft landing. They're not seeing any form of recession, right? So the soft landing for the rich, affluent markets represented by luxury brands are experiencing a soft landing, continuing to thrive despite broader economic challenges that continue to escalate and intensify. Wealthy investors in high-end markets remain insulated from economic volatility, allowing them to capitalize on opportunities even during turbulent times. In fact, too big to fail bank, JP Morgan, calls it the U.S. economy has made a soft landing. So based on their data, the U.S. economy remains strong for both consumers and big companies, a sign that the Federal Reserve may have achieved the much discussed soft landing with lower inflation and healthy growth. This has also been reinforced by Janet Yellen saying the goal reached after recession fears has finally come to fruition. So she's stating on CNN on Friday that the U.S. has achieved a soft landing after years of concerns about the U.S. economy following the COVID-19 pandemic and high inflation rates, a scenario many economists once thought unlikely. So when we talk about the soft landing, the idea is that the Fed has engineered interest rates in monetary policy to ensure its dual mandate, where the central bank is charged with keeping prices stable, containing inflation, while at the same time maintaining full employment. And this is the Federal Reserve operations chart when they first became operational on November 16, 1914 at 9 a.m. at the Federal Reserve Bank in New York. This chart has become very, very active. So while the Fed is concerned about inflation, it takes tightening measures to moderate the pace of economic growth. But they have to be careful, right? If they don't get it right, the perception of a soft landing ends up becoming a financial crisis.
To watch the full forecast webinar and gain in-depth astrological insights on global markets, key economic events, and investment strategies, go to williamstickevers.com and register for the Regulus quarterly financial astrology forecasts today.